how to find the best trade entry after a pullback. Especially in trend trading, it's always the question where to find the best entry in order to take the most of the trending movement with your trade for the most profit, of course. But there is a tool which can help you to analyze the market and see if there is a possible trend reversal or when the trend pullback is ending. This is what we're going to talk about in this video, so let's start right away. We're here on the Euro New Zealand dollar on the 4-hour time frame. And like we have here, we have a downwards movement. We see here the trending movements and the pullbacks in between. So there's the trend movement and the corrections. And here you see we have a trend reversal. The market is making a higher high, and then the trending movements into the bullish direction with small pullbacks. And what can help us analyzing the corrections is a tool called Fibonacci retracement. It's a mathematical sequence, and one of the first pioneers of the chart technique was Ralph Nelson Elliott, and he cut the movement between highs and lows into parts after the golden cut. So as a result, we have three really important marks, the 31%, 50%, and 61.8%. So keep these marks in mind because they are really important support and resistance lines, which we are going to use in our following analysis. So let's apply the Fibonacci retracement to the chart with the first movement here. So we apply it from the last high to the new lowest low. Then we can make it a little longer. I will move the chart a little bit so you see the numbers. And here you see that the correction that was following was coming up to the 50% line. Here you see the important marks 38.2, 50, and 61.8. And the market was correcting until the 50% line and then continuing the trend. And like this, you can apply the Fibonacci retracement to all movements of your trend. So in this case, for example, you see the Fibonacci retracement just came up to the 38.2 line, and then the market continued in the downwards direction. It's mostly in strong trends that the line is only coming to the 38.2 line, and slower trends is coming often higher, but above this area it's more like the last man standing. I will show you down here. After this last movement down here, we see the pullback is going through those lines. So this is not a normal correction anymore. We really have to be careful here because this is an indication for a possible trend reversal. And as you see, the market comes further down, makes a new lower low, but then again, if we apply the Fibonacci retracement here as well, you see the market goes through again, and at this time also making a new higher high and a new higher low in this case as well. And for those who didn't trade the breakout, for example, and try to find a good entry into this new upwards trend, those can use the Fibonacci retracement, but I have to erase this one in this case because since we have changed the trend direction, we apply the Fibonacci retracement now from the last low to the new high. And this way you always make sure that you have the lines in the right direction that you need. So you see we have a strong trending market here. It's coming close to the 38.2 line and then continuing the trend direction. And if we move it up here to the next one, you see again it's still around the 38.2, so it's a strong trending market. What we also see here with the big green candles and not even a red one in between. This is a really powerful tool for you to use and analyze the markets to get a good trade entry. What you can do, for example, if you want to enter the market right here at this point with a long position. Maybe you have your target up here, and you can also use the Fibonacci retracement to find a stop loss or a good level for a stop loss. Because since you know we're in a trending market, then you can put your stop loss right at this area of the 62% line, because you still leave space for the trade, but you make sure that you have not too much risk in this trade, because since it's a trending market, a strong trend, there's a really low percentage that the market comes further down than this. And if you put, for example, the stop loss below the last low, you would have a lot more risk, so you can make a better risk reward ratio if you use the Fibonacci retracement in addition to find your stop loss level. But of course, as always in trading, Fibonacci retracements as well are not an all-purpose weapon. That doesn't exist in trading. We work with probabilities and try to find the trades with the highest probability to work out. And for this, the Fibonacci retracement is a good tool to help you analyze. But don't use it itself just as a strategy. Try to combine it with strong support and resistance levels as well, in order to even raise your probability for a good trade. However, the Fibos are a good opportunity to trade a correction, to find a good entry after the pullback, so you can start trading with it. Try it in paper trading first and see how well your trades turn out with using it. So that's it for today. If you want to learn more, click below this video and you'll find the link to my Telegram group where you can get contact directly to me and of course get more information about trading with me. So see you there, or at the latest next week with the next video. Bye bye.